Carlton's Travel Adventures. Go get your passport. This is Carlton with Carlton's Travel Adventures. Another beautiful sunny day in Medellin. Yeah, it's Christmas time. So, I was in Brazil for a while, a couple of weeks. I'm back in Medellin, as you know. I took a break from Forex when I was in for 2 weeks. It was a nice break. Sometimes you got to get away from this stuff to kind of give your mind a break, you know what I mean? Refresh yourself. But I like doing financial stuff. I've been in the stock market since I was 23 years old, because I grew up in New Jersey, worked in New York City, by Wall Street area for a while, and just got into it. It's hard not to get into it. Especially when you're black, you don't have the parents. My parents only had third grade education. No one to teach you that stuff. So you have to learn from other people, and so you have to get a mentor. This old guy named Bill Westland. When I met him, he was about 69 years old. He did about 20 years with U.S. Steel, and he came to work for a bank, and he kind of mentored me, which was great. You need somebody to mentor you, and especially black people, man. You don't have enough mentors in the financial area, okay? So I noticed that from watching YouTube, a lot of us getting into it now. We're starting to learn, which is really good. I'm really proud that we're starting to really learn about financial area, Forex, crypto, and options, right? So I've been in stock market success for years, mostly a long-term investor. And I started doing Forex when I retired. It's been going great. You cannot become an expert in Forex in a short period of time. You just can't. Unless you pay somebody as an expert to teach you. That's possible. They would reduce your learning curve quite a bit. If you don't do that, you're going to have to learn the hard way and just pay by losses, It's okay. Some people don't call them losses, we call them lessons. Not losses, lessons, okay? Because you always learn something when you lose money. So, doing Forex, almost 3 years now. I still love it, still into it. It can be frustrating when you make, then you lose, you lose. Always trying to get better. People I've studied that's really good at it, they'll take them 3 to 5 years to be really good at something, Really, really good at it, take you a while, unless you're just lucky. I had one subscriber who's told me he paid this guy from Great Britain $10,000 for personal lessons. And he said, well, it's a lot of money. But it really isn't. If you can have the right person teach you one-on-one, not some group thing, where you go read and pay $50 a month. You spend extra money, $5,000, whatever it is, and have somebody teach you one-on-one, and if they're really good, they can prove to you they're really good with showing you examples and showing you the record. It's worth it. Believe me, it's worth it. It sounds bad, but it's worth it. All right? Now, I'm going through the same decision with options. I'm starting to do options. I've been starting in October. Now, so it's a couple of months in options. The results coming in November, December. So I'm going to tell you about that right now. This tape's about my experience with options, So I've done the Forex. I'm getting better, but I'm not there yet. Always trying to get better. Actually, just hired a new mentor for Forex recently. So got into options 3 months ago, but I've been thinking about it for over a year. Another subscriber, we're friends now, he's from Chicago. He was here, he's been doing options for about a year and a half. He did really well last year. Been trying to get me into it. He tried the Forex things first, then he switched to options. And I've been so tied up with Forex, I said, let me not do it. But I've been starting to study on the side. The goal was to go into options back in January of this year. Didn't really get there till October because I was still so involved with traveling and doing Forex, right? But this break from Forex for a while, for two weeks, got me thinking more about options, so I jumped in, yeah. Let me tell you my experience in option. It's also risky and it's complicated, okay? So this tape is not to teach you options. Just tell you my experience, get a little motivated to go out and try it yourself, okay? I love this stuff. I love anything financials, all right? So let me talk. So I took a 7-hour course on TD Ameritrade Thinkers. It's on Thinkorswim platform, one of the better platforms out there. So I did that. Then I did a lot of YouTube stuff and spoke to my friends, Alando and another friend from Chicago, okay, Matthew. Just learn, help me out and bounce ideas back and forth, all right? And then I dove in October. It's way late. I wanted to jump in January and February, but it's October, better late than never. Nothing happens before it's time, you know what I mean? So I started out with something called spreads, credit spreads, all right? I was told it's probably the easiest thing to do, right? Also joined this service, this kind of wire service that they'll give you all these ideas. This guy that does it, he's a computer genius, a brother, and I'm not going to tell you the name of the service because they're not paying me for advertisement. And I'm not sure it's even worth it right now. We'll talk about that in another tape. You can get most of the ideas I get from them, I can get it from TD Ameritrade if you know what to use a tool, complicated tool that they have, you know. But anyway, so being new, I started to get some ideas from them, you know. Again, learning curve thing. I subscribed to a year service. I think it's like $25 a month for a year. And so I'm getting these ideas. Somebody talk with spreads, right? So you can have what's called bear spreads or bull spreads. Bears and bulls, right? Down market, up market. And I started with, because in October, the market was doing so well. Stock market was doing so well, Dow, NASDAQ. So I thought it would start coming down, adjusted way down. So I started doing some bear credit spread, not bulls, bear credit spread. And make it short, the market kept going up, 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 up. And I was, you know, it's supposed to be in a range, and it went so high, my contract was just useless. I lost money. And with these spreads, you can make, say, $60, $30, $35 when you first write the contract, when you do the but you can lose 3 times that. Believe me, you can lose 3 times that. You know, so you can make $35 and lose, you know, $100. Not a great thing. So I did 6 contracts, spread contract, all bear credit spreads. I think I made money on one. It might have been Facebook. You know, because Facebook was up and down, up and down, up and down. Microsoft took off, so Microsoft, that was the worst one that cost me the most money, right? So I think I lost $394 lost on the Microsoft spreads, and I made 50 on the Facebook spread. But the rest of them, the other 4, I think I did 6 total. The SPY and the QQQ, lost money. Lost between, you know, $65 here, $90 here, $90, $80 here, and the rest of them. So ended up being a loss on all the spreads, you know. But it's okay. That's how you learn. And I learned a lot of ways to mitigate those losses. One way, you know, is by not having to run the entire, you know, expiration period. If you're down 20% and you see the market's taking off, maybe get out of it and only lose 20% versus losing, you know, 100%. You know, some of them you held and say, okay, I'm down 20%, so 50%, but I have plenty of time. It's going to come back. You're down 80%. Oh, it's going to come back. You have 2 more weeks or have a week, and you keep waiting for it to turn around. And it doesn't turn around. Okay, some of them went all the way to expiration. Somebody said never let it go to expiration, but when you're down so much, figure might as well let it run and see if it comes back around, right? So some of them I sold them out, I closed them out, lost money, and few of them I just let them go all the way to expiration and lost money. So it wasn't a great experience. Lost a lot of money I lost on 5 of the 6 spreads. It's okay. That's how you learn. I expect to learn that way. That's why Forex, to learn, you got to spend the time and learn, right? The next time I would probably get out of these spreads. First I do a combination of bear and bull spreads, you know, and then, you know, get out of a spread if it's like 20% down, 30% down, get out of it and cut your losses small. If you make $50, or to make it easy, you make $35 when you did that spread. If you're down $50, might as well get out of it. Maybe look down 15 total if you know, and you're okay. You know, better lose $15 than lose $90, right? Look at it that way. And some of them can be substantial losses, like the Facebook, Microsoft. I think that's when I lost Microsoft. I lost $394 on that contract. It's okay. So let me go to something else. So speaking to a buddy of mine, you know, Orlando and some other people, and think about different ways different strategies. I said, let me do, what's called the wheel, right? I'm selling puts, generating a premium. If I get called, I sell call, get more premium. So it's a way to generate a lot of income on your portfolio, okay? You guys should think about that, really think about that if you have some stock. You buy stock in, some example, Microsoft, right? And it goes down. Oh, perfect example, QuantumScape, when it went out, when it first came public. I bought stock in QuantumScape for $50 and $52 this year. Went up to like, I don't know, one something. But I have a long-term view on QuantumScape. And what happened? It tanked. I think QuantumScape might be 20 something right now. I have shares I bought at 50 and 40. So if you could sell calls on those and generate money every month, instead of sitting there and just wait for it to turn around, that's good. It lowers your costs, right? Just keep money coming in from premiums by selling calls. So you can think about it and consider that. If that's all you do and nothing else riskier, if you have a portfolio, just try that, right? So you start by selling, you can either buy the shares, then sell the calls, or just sell puts. Sell puts, hope it never doesn't get called. Basically, it's a quick summary of the puts. Let's say stock at $60 a share. You sell the put, at a certain lower strike price, like say $20 a share, make it all easy. So you get a premium for selling that put, right? And as long as it doesn't close below that $20 a share, you keep the shares. So as long as it stays above the 20, let's say it's 30 years, whatever it is now, it wrote a put at 20. As long as it closes in a month or 2 weeks, whatever, above that 20, you keep the premium you got for selling the put, and you keep your shares. So it's great, as long as it stays above, right? So you just keep selling puts. If it does go below, you got to buy the shares at a higher price than it is right now, right? But we turn around and sell calls to generate more premium by selling the calls, right? So it's not a bad thing to do, a wheel strategy. But you got to know what you're doing, right? And it's okay. I like to take risk, take some chances, and that's how you learn, by losses. If you lose some money the first few months or the first 6 months, it's okay as long as you're learning something, right? So what I did, classic mistake, being greedy. The first one I did was a company called CRTX, pharmaceutical stock. Pharmaceutical stock can be very, very volatile, which means you get a bigger premium, right? So at one time, CRTX was like 152 per share, right? And they start coming down. Pharmaceutical stocks, they submit, drugs for review to the FDA, phase 1, phase 2, phase 3. And depending on if they get rejected or accepted, if it did real well, if it did poorly, then, and it's been announced it did poorly at the test phase, stock can tank, right? So CRTX had a really high volatility, over 420%, really high volatility, right? Which means it had a really high premium because it's really volatile, right? Certain things you have to look for when you do these deals, right? Implied volatility, the delta, open interest, and dividends, right? I won't go into these details. I'm not trying to teach you options right now, but these are all important items. And you can also track the stock, on a chart with TradingView or whatever, MT4, and see an idea where it's going to go. All these things, the more you do, the better your odds are of doing better, right? Making money. So it's going to take time, which is okay. I'm still learning how to track, chart stocks for Forex. I'm getting better every day. But anyway, so it was like, I remember 30 something dollars a share, CRTX. I sold a put at $22.50, which means I got like a really big premium. That's what attracted my eyes. The premium was $690 for 1 month. I'm saying, whoa, $690, check come right into your pocket. What a nice amount of money, right? It's great. Even if it went all the way to the same $22.50, I'm collecting all this money. What happened? It went to one of these phase 2 or 3 things with the FDA. Came out pretty bad. The news hit. and the stock tanked. I think it closed, by expiration, the stock might have closed in the teens, maybe 14, 15, or whatever it was, 16. I sold the put at 22.50, which means I'm not forced to buy those shares at 22.50, even though the price of the stock is now maybe 16, 17. Think about that. You're buying it higher than it's really worth. That's the way the options work, right? So I collected all this premium, which was great, and I was happy about that. It attracted my eyes. But because it's so volatile, it got smacked, and now I'm forced to buy the stock at 22.50. It's worth in the teens, right? So, and now the volatility has been smacked out of it. So when I turn around and try to sell calls at 22.50, I'm getting like $10 for 2 weeks. I mean, $10, nothing, no volatility. It's smacked. So I have to wait till it comes back to 22.50 to sell it, to go even. If I can get back the same amount what I bought it for, 22.50, I'm ahead because I got the 690 right here, right? So that's what I'm looking for. Actually, you can sell it even $20 a share. Because you make, you make 690 over here, right? So I'm selling calls on that one, $10, not much. So I got smacked. I lost about $1,000 in value of the stock on this one. Next big one I did was BKKT. I did 3 separate. I love the company so much. Read about it. It's not pharmaceutically based, not a pharma stock. It looked really nice, right? BKKT. So I said, let me sell some puts on it. If it does come down, I don't mind owning it, right? So ended up doing, long story short, I ended up with 3 separate puts. I sold 3 separate puts on it. And the first one I sold, because the price was higher, was at $22.50 again, or $22 a share, something like that. And by the time that I laddered them, they didn't all mature the same date, different time periods. And the first one that matured, the price was actually below $22 a share. Might have been like 15 or something. So I got smacked again, okay? Had to buy those shares at 22, even though it's worth about 15. Losing money again, all right? But this time I turn around and start selling calls. I'm making like $30-something a week by selling those calls. So that's how I'm gonna keep adding money, keep selling those calls, sell those calls, collect $20, $30 a week, which is gonna lower my costs. I keep doing that forever. Just keep selling calls, selling calls, collect $30. Although if I didn't do that, I have this stock sitting in my portfolio, losing $700, collecting nothing on it. So by selling calls on it, I'm collecting that money, every month, every week rather, or 2 weeks. It's lowering my cost of buying the stock, right? So that's the benefit of doing the options. You have them sitting there, losing money and collecting nothing on it, right? That's why I love it. The other one matured last Friday. That's a $15 strike price. And it closed right below that. Not further, but I got called in that one too. So now I own that at $15 a share. Maybe it closed at maybe $13 a share, right? Wasn't too bad, about $200 loss. Better. Not as bad as $22. So I'm selling calls on that one too. Collecting 30, I think the last one I put in like 2 weeks, like $38. Maybe I'll collect $80 for the month. And just keep doing that. Not bad, right? The third one now is going to mature December 17th. That's at $14 strike price, okay? Right now, the shares went back up. Now it's worth, I think, $14.65 closed out today. $14.60. So that one I bought at $15 a share, I'm actually ahead because I got $155 in premium, And then, as long as it closed above 14, I'm good. I collect $110 in premium I sold this put with a $14 strike price and don't own the shares. Even if I get the shares called right below 14, it's not bad. I can sell premium, sell calls on it and collect some more money. So I don't feel too bad about that. The big one I felt bad about is the CRTX, okay? Did one other, sold another put on another, it might have been AR or AVIL, ARIL, something like that. And I bought it, when I sold the put, it was like $12, $13 a share. And when my strike price was $9, went below 9, it closed like 7 something. So I'm owning it at 9. It's like 7 something now, owning it at 9. So it's not a lot of money. It's $900. So on this one, ARVL or AVIL, forgot the name of it, I will just try to get some premium by selling the calls on it. It's not much volatility in it. Maybe I collect $20 a month, who knows, but it's better than zero. Until it gets back up there to $9 and sell it at 9. Just get out of it, or try to sell it at 10. But it's not a big deal. But I would say, man, I have a few more that's doing well. I think I have about 6 or 7 more, and they're doing well. Okay, in other means, most of them expire the 17th of December, so I have a little time, and some of them are real close to the strike price, which is good, and if half of them close above the strike price, I'm good. See, they might close just there. If it's just under strike price, I'll get the shares and I'll write some calls and collect some money on those. So one is SEV. It's a car company or something from Germany, EV stock. Anyway, so if you got a portfolio stock, looking for some other ways to make money on it by getting some monthly premiums, options are a great way to do it. And I'm going to keep learning. I'll probably do the wheel strategy, selling puts and selling calls for another 3 months as I learn other strategies, okay? There's a bunch of other strategies out there. Some can be real complicated, Some of them are really complicated, but they also reduce your risk, The thing about, I'm in Robinhood. Robinhood does not allow you to do any naked calls to lose a ton of money. But there's ways you can invest $100 and make $1,000, okay? If you have to come the right way, if it falls the right way for you. But it's more risk. But as you learn more of these strategies, some of you write 2 down here and 1 up here, but it's get complicated. But I'm trying to learn as much as I can. I'll stick with the wheel strategy now and learn as much as I can, and it's going to add to your knowledge base of way to make money, okay? So don't be scared to go out and try it. Just go out and study it and try it. You can't lose it by knowledge, all right? Thanks for watching the video. Give me a thumbs up, and I'll bring you more update later on, in maybe a couple of months, so I'm doing on the options again, okay? Hopefully I get better and better at it. Thanks. Have a good night.